Hello everyone, welcome back to another video. If you are new to this channel, my name is Farhan and I help accounting students like you ace their exams. In today's lesson, you will learn to prepare the ledger account for allowance for impairment of trade receivables for 2 different financial years. You will also prepare an extract of the financial statements and understand the accounting concept which requires us to prepare the allowance. So let's look into the question that we've got on the left hand side. Pines Caterers financial year ends on 31 December. It had a beginning balance of $5,000 in its allowance for impairment of trade receivables account on 1 January 2015. Pines Caterer had the following information pertaining to its trade receivables. So based on the first paragraph, we understand that we are working with a business where the financial year starts on 1 January and ends on 31 December. And we are given an opening balance of $5,000 for our allowance for impairment of trade receivables account. Here we have got some information for 2 financial years ending 31 December 2015 and 31 December 2016. For the year ended 31 December 2015, we have got total trade receivables of $50,000. Now, trade receivables refer to the credit customers of the business. And we know we had 3 customers, Hibiscus, Frangipani, and Cactus. And each of these customers owed us different amounts. As you can see, Hibiscus owed us $4,000, Frangipani owed us $2,500, and Cactus owed us $6,000. We are also given some relevant information with regards to these customers, such as for Hibiscus, we know that this customer declared bankrupt on 31st of August 2015. Frangipani, we contacted this customer many times, but she didn't return our call. And for Cactus, the debt is already 6 months overdue. And then we are given some similar information for the year ended 31 December 2016 for 2 different customers, Lily and Rose. So the requirement of this question is to prepare the allowance for impairment of trade receivables for the years ended 31 December 2015 and 2016. So let's look into the workings on the right hand side and let's understand some fundamentals. First of all, allowance for impairment of trade receivables is a contra asset account. So what do we understand by a contra asset account? A contra asset account is an account which records the reduction for a relevant asset account. And the relevant asset account in this case is the trade receivables account. So whatever reduction the trade receivables have to go through, they are stored in a separate account, which is what we refer to as the allowance for impairment of trade receivables account. And therefore, this is classified as a contra asset account. By default, all contra asset accounts should have a credit opening balance, which means when allowance for impairment goes up, we credit it, and when it goes down, we debit it. Okay? So what is the actual meaning of allowance for impairment of trade receivables? This refers to the probable unrecovered amounts from credit customers. Like there is a possibility that this is the amount which we will be unable to collect from our credit customers or trade receivables. Okay? And we do this on the basis of historical information and how the customer has been behaving since we tried to recover the money. Now let's look into the preparation of the ledger account. So here I have the outline for the ledger account for the allowance for impairment of trade receivables, which is constructed using the usual 5-column ledger account format, with the date being in the first column, followed by the details in the second column. Then we've got the debit and credit columns, and lastly, we've got the net balance column. So to begin this account we are starting with 2015, and we know we are working with a business where the financial year starts on 1 Jan and ends on 31 December. So on 1 Jan 2015, we've got an opening balance, which is what we write as balance brought down, which is B/D. And we've got an opening balance of $5,000. And based on our discussion regarding what an allowance for impairment of trade receivables account actually is, we know it's a contra asset account, and by default, all contra asset accounts should have an opening balance on the credit side. this $5,000 is what we have sourced from the second line of the first paragraph, where it clearly mentions it had a beginning balance of $5,000 in its allowance for impairment account on 1 Jan 2015. Next, we have to make sure all the details are filled in events that happen in sequential or chronological order. So starting with 31st of August 2015, where we know that Hibiscus, a credit customer, declared himself bankrupt. And the amount Hibiscus owed us was $4,000. Okay? All right. So on the 31st of August, what's going to happen? So as you understand, the allowance for impairment is an account where we have the probable amount of credit customer unrecovered amounts, right? So now that Hibiscus has already confirmed that he is unable to pay because he is bankrupt, we can reduce this allowance for impairment account by $4,000. So if we want to journalize this event or transaction on the 31st of August 2015, how is it going to look like? So at 31st of August 2015, the transaction that Hibiscus declared bankrupt, it means that in our books, we now know that we no longer have a customer called Hibiscus, so therefore we have to reduce the current asset, specifically the account for Hibiscus. So we're reducing current assets, and when assets go down, we credit it. So that's why we are crediting trade receivables, specifically the account for Hibiscus, by $4,000. At the same time, we know allowance for impairment, which is a contra asset account, is now going down by $4,000 because we had an initial balance of $5,000. And out of that $5,000, $4,000 has already been confirmed that we're not going to receive. Therefore, we can reduce the allowance for impairment account by $4,000. Okay? So as you can understand, based on this journal entry, the allowance for impairment account is being debited by $4,000 due to the fact that our customer, Hibiscus, cannot pay anymore because he's bankrupt. That is why, since the allowance for impairment account is debited in the journal entry, in the ledger account on the debit side, we are including $4,000 for 31st of August 2015 with the relevant cross-reference or the account that we're using in the details column being the current asset account for trade receivables, specifically the account for Hibiscus. Don't just write trade receivables because you will lose marks. You need to be specific with the customer, who in this case is Hibiscus. So $4,000 being debited here gets deducted from $5,000 credit, obviously because we've got a credit and a debit, which is a mismatch. So $5,000 minus $4,000 gives us $1,000, and obviously we have got more credits than debits, so that's why the final balance should have a net credit. All right. So after 31st of August 2015, in the year 2015, we don't have anything else except for the end date, which is on 31st of December 2015 itself. And on the end date, we have got two more customers left. After Hibiscus thing is sorted, we have got Frangipani and we have got Cactus. If you clearly look into the narration that's given next to the amounts for each of these customers, we understand that each of these customers, we cannot really reach them. Frangipani has refused to return our calls, and we have contacted this customer many times. And then Cactus is already 6 months overdue. This means there is a strong possibility that this now is not going to be collected in the future, and therefore this is a probable amount which we look forward to increase by increasing our allowance for impairment account. So allowance for impairment account at 31st of December 2015 must have a closing balance of $8,500 credit based on the amounts that are owed by these two customers, $2,500 by Frangipani and $6,000 by Cactus. All right. So we are uncertain whether these people are going to pay us because we haven't really got in touch with them. So therefore, this means that the allowance for impairment account at 31st of December 2015 should have a balance of $8,500 credit that we should end with. Now, so we know we're going from $1,000 credit net balance to a net balance of $8,500 credit at 31st of December 2015. So So how can that possibly happen? That can happen if we have got an increase, which is what you can see in this case. So let's look into the journal entry for this increase, all right? So at 31st of December 2015, we understand we are going from $1,000 credit to an ending balance of $8,500 credit, which means it's going up by $7,500 in between 31st of August 2015 and 31st of December 2015. So if I want to journalize this at 31st of December 2015, obviously we understand that our allowance account is going up in value, which is a contra asset account. Therefore, we are crediting the allowance for impairment of trade receivables account by $7,500 to reflect that increase. And at the same time, our expense is going up in value because obviously the allowance is going up, which is causing an increase in the uncertainty and therefore an increase in expenses, which we will report in the income statement. By default, all expenses are debit in nature, which means when the increase we debited, therefore we are debiting the impairment loss for trade receivables by $7,500. So as you can understand, based on this journal entry, the allowance for impairment of trade receivables account is credited in itself, which means in the ledger account for allowance for impairment of trade receivables, on the credit side, we are going to include $7,500 at 31st of December 2015 with the relevant account as cross-reference, which we're using the details column to be the expense account for impairment loss and trade receivables. Again, our allowance has gone up since 31st of August from $1,000 to $8,500. That is why we now have an expense because it's not really looking good for the business, as you can understand. All right. So that takes care of the first financial year ending 31st of December 2015. Now let's look into what's going on in the year 2016, all right? Now in the year 2016, on the 1st of Jan, we're starting with an opening balance of $8,500 credit. Obviously, we expect it to be credit because we have a contra asset account. And also, this is the closing balance from end of 31st of December 2015, which we must carry forward in the new financial year. Now, if you look into 31st of December 2016 details, all right, so you know we have got two customers, Lily and Rose, and Lily owes us $3,000 while Rose owes us $1,500. So we got a check from Lily on the 15th of December, but it was dishonored, which means when we wanted to collect the money from Lily's bank just told us, oh, Lily has no money, so it was dishonored. And then regarding Rose, we don't have any good news, but we know that Rose is facing financial problem. Again, these two events are adding to our uncertainty or possible amounts that we may not be able to collect, right? So how should we account for this? So the total that we may not be able to collect from Lily and Rose combined is $4,500, which is obviously going to be the ending balance at 31st of December 2016 for the allowance for impairment of trade receivables account. At the moment, there are significant uncertainties regarding collecting this amount, and allowance for impairment account being a contra asset account which records the probable amount that we may not recover from our credit customers will therefore have an ending balance at 31st of December 2016 to be $4,500 based on the amounts owed by Lily and Rose and the fact that both of these customers are not doing well financially. Okay? All right. So from 8,500 credit opening balance, if we are going down to 4,500 credit, it's actually a good thing because now the allowance is going down, right? So if the allowance is going down, how should we journalize this? So let's look into the journal entry that we can perform on the 31st of December 2016. We understand on the 1st of Jan 2016, we had a balance of 8,500 credit for our allowance for impairment of trade receivables account, which went down to 4,500 credit at the end of 31st of December 2016. So it went down by 4,000. Now this is a good thing, as we can understand, which means that now our expenses are going to be reduced. Okay? So when the allowance for impairment of trade receivables goes down, we debit it, because we know, based on our discussion at the beginning of our lesson today, that it is a contra asset account which has a credit opening balance by default, which also means that when it increases, we credit it, and when it decreases, we debit it. So now that is going down by 4,000, we're debiting the allowance for impairment of trade receivables account by 4,000. And at the same time, we know our expenses are being reduced. Therefore, impairment loss on trade receivables is being credited, because when expenses go down, we credit it. And that is 4,000. So how should we reflect this in the ledger account? Note that in this journal entry, the allowance for impairment is being debited. So which means in the ledger account for allowance for impairment of trade receivables, $4,000 is being debited at 31st of December 2016 with the relevant cross-reference for the account used in the details column is the impairment loss on trade receivables, obviously stating that expenses are going down as well, because it's a good thing. The fact that our allowance has gone down significantly from 8,500 on 1 Jan 2016 to 4,500 at 31 December 2016. Okay, so once that is done, then you must not forget to carry forward this opening balance in the next financial year, because we have got one extra mark in the exams allowed for it. So on 1 Jan 2017, you show the opening balance to be 4,500 credit based on what you have closed this account in the previous year. Okay? All right. So that takes care of the first part of the question. Now let's look into the extract. So the question says, prepare an extract of the income statement, which is now known as the Statement of Financial Performance in the new syllabus, for the year ended 31 December 2015. Okay, so this is referring to the end of the first financial year. So what's happening? So if we look into the second part here, which I've already done, so you obviously have your formalities at the beginning, where you write the name of the business and that you're preparing the statement of financial performance for the year ended 31st of December 2015, and obviously is an extract. So we know at 31st of December 2015, we had an expense for impairment loss on trade receivables, right? So let me remind you by taking you first to the journal entry, where if you recall, we debited the impairment loss for trade receivables account. So when we debit impairment loss for trade receivables, it is referring to the fact that expenses are going up in value, and when expenses go up, we debit it, right? In the income statement or the statement of financial performance, we show all the expenses. So that is why when you're preparing this extract, you first start with less expenses, and then you record impairment loss in trade receivables by 7,500 because your expenses are going up at 31st of December 2015, obviously due to the increase in allowance for impairment of trade receivables, which we have seen earlier, right? Now, if you go to this next part of the question, where we are required to prepare an extract of the balance sheet at 31st December 2016. This is the next financial year. So an extract of the balance sheet is going to look something like this, where we prepare the assets section, specifically the current assets section, because trade receivables are credit customers of the business and they're current assets, because we look forward to collecting the money that they owe us from them as soon as possible. That is why they are current assets. So trade receivables initially for the year 2016 was $35,000, which is what we have sourced from the question here. You can see I'm circling in red on the left-hand side. And the allowance for impairment of trade receivables at 31 December 2016, based on the amounts Lily and Rose owe us, is $4,500. So we are subtracting this $4,500 of allowance for impairment of trade receivables from the trade receivables amount of $35,000, which is the gross amount. That leaves us with a net amount of trade receivables for $30,500. So the book value was $35,000, which is then adjusted for the uncertainty in the amount that we may not be able to recover from our credit customers, and that amount is $4,500, which we are subtracting, and that is leaving us with $30,500 as the net amount eventually, all right? So I'm just keeping this in bracket just to refer that we are subtracting this, okay? All right, so the last part of the question. State and explain The accounting concept that Pines Caterer is following when it provides an allowance for impairment loss and trade receivables. In 99% of the cases, when you're dealing with a question like this, it's going to be prudence accounting theory, which we will use. What's the prudence accounting concept? The prudence accounting concept states that we should never overstate our assets and our profits, and we should never understate our liabilities and our expenses. Okay? Now, within this question, we are not going to overstate our assets and we are not going to understate our expenses. When we say we are not overstating our assets, what we are actually referring to is that trade receivables, which is a current asset account in itself, the book value is always adjusted for the allowance, which you have just looked into when we did the balance sheet, right? Where the book value of 35,000 was reduced by 4,500 of the allowance or uncertainty that left us with the final net balance of 30,500, right? So that's what we're referring to, that assets are not overstated and the book value of trade receivables is adjusted by the possible amount or the allowance for impairment of trade receivables that we may not collect. Next, expenses are not to be understated, which means that impairment loss on trade receivables, which you have seen at 31st of December 2015, was an expense in itself, right? And that increased. So we ended up showing it in our income statement or statement of financial performance underneath expenses, which is going to reduce our net profits, right? So that is why when you're dealing with a question like this, it's always prudence accounting theory that's going to be relevant for you. All right. So that's all for today's lesson. So our takeaway from this lesson today is that allowance for impairment of trade receivables is mainly a contra asset account, which always should have a credit opening balance. And also when it increases, we credit it, and when it decreases, we debit it. And the allowance for impairment of trade receivables account in itself is an account which stores all the probable unrecovered amounts from our credit customers, right? Or the possibility of the amounts owed by credit customers that we may not be able to collect. Okay? And the reason we call it a contra asset account is because this account is a separate account which records the reduction for a relevant asset account, and the relevant asset account in this case is the current asset account for trade receivables. All right, so I'll conclude today's lesson now, and I hope you found value in this content. Make sure to drop a like and subscribe to this channel, and watch out for more videos that I'll be uploading shortly. Goodbye.